Welcome back. Hope you're having a good morning so far. Looks like it's going to be a pretty strong morning on Dalal Street. The GIFT Nifty is indicating a big start. But let's get our entire research team to tell us about the stocks that you need to watch out for as we begin the day. Britannia, let's see how that one fared. Well, as always, I'm going to ask you, was it a good day, Mangalam?
Well, I would call it a nutri choice, Sonia. The nutritional choice that the company made this time around was they cut prices to boost volumes. And every time you do that, make a nutritional choice, you lose out on taste. So that means realizations were lower. But no problems when it came to EBITDA as well as the net profit. They were largely in line with street expectations. So let's run you through the numbers. Revenues came in at 4250 crores. The street was working with a number of 4300 crores. The EBITDA 821 crores versus poll of 815 crores. And the net profit at 555 crores. The street was working with a number of 550 crores. Now, here's where the Nutri-Choice helped the company. Volumes came in at 5.5% as the company took some price cuts. The street was working with a volume number of just 2 to 3%, and that's a positive. They have seen progressively recovering demand environment. They've added more than 29,000 distributors in rural India, and their key focus states, which are UP, MP, and Rajasthan, have actually done better despite adverse demand conditions. So the stock ended at the low point of trade yesterday, expected to see a bit of a relief rally today.
Okay, expect a relief rally today. Yash is also joining in this morning to talk about Max Financial and how that one looked. Yash, over to you.
Well, Sonia, you have to look at three important numbers, of course, annualized premium equivalent, VNB and VNB margin. If I have to summarize the numbers for Max Financial in Q3, APE has grown year on year, but it has slightly missed CNBC-TV18 poll. But the negative impact is that big miss on VNB as well as the margin front. Total AP, as I said, has grown by about 19% on a year-on-year basis. It's missed CNBC TV18 poll by about 64 crore rupees. Value of new business is down 18% on a year-on-year basis. It's missed the poll by about 56 crore rupees. A big hit has come as far as the margins are concerned. On a year-on-year basis, there's a 1200 basis points dip in the margins, which has come at about 27.24% versus 39%. And it's missed CNBC TV18 poll by about 200 basis points. But despite the negative results, I'm still going with the green because there's a big positive which came in the numbers. The company has announced that the insurance regulator has given the company an approval for Axis Bank Max Life deal. Axis Bank will be infusing 1600 crore rupees in the company for acquisition of about 6% stake.
All right, Yash, so green despite poor numbers, but there's news to back it up. Thanks very much for that. Let's go back to Mangalam now. Nykaa and Berger paints should also be in focus. Mangalam, take it away.
A colourful quarter for Berger and pink for Nykaa is what I would say. Good quarter for Berger because it's reported better than industry performance, likely gain in market share as well. So revenues for Berger grew 7% this time around, and from the paint company numbers that we have so far, Asian Paints grew at around 5.5%, Consignor like at 5%, so Berger did better. And of course, for all the paint sector, we've seen sharp EBITDA margin expansion, and for Berger as well, net profits increased by nearly 50%. The volume growth this time around for them was 9.1%, with the premium end doing slightly better. The only fly in the ointment, the company said that going forward, the operating margin may see a little tapered down growth. That's because of the price cuts that the company has again taken to boost volumes itself. For Nykaa, it was a good performance, both year on year and quarter on quarter. And in the last quarter, there were three big drivers. It was one, the festive season, second, the Pink Friday sale, and thirdly, the big Nykaa Land event that the company did, as a result of which revenues grew 22%, EBITDA grew 26%, and on a low base, net profit nearly doubled by about 105% itself. Overall, gross merchandise value grew by 29% as well. Growth was seen in both beauty as well as fashion, and others, which include men's grooming and the superstore that Nykaa seeded, has seen a growth of 88%. That's the growth driver for the company.
Okay, all right, Mangalam, thanks a lot for that. Well, let's hop across to Sonal. She's here to tell us about Navin Fluorine. Sonal?
Good morning, Nigel. It was a week set lower than what the poll suggested as well, and on a YOY basis as well. The margins came in at 15.1% versus a poll of 22.3%. On a YOY basis, revenues are down 11%, the EBITDA is down 51%, the operating profit margins are down 1200 basis points, and the profits are down 27%, and it's a clear miss. The company, however, says for the new CEO, they have shortlisted some candidates, and it is expected to finalize the name very soon. So that is a breather. The business is impacted due to deferment of campaigns. There's no cancellation, so to say, of their contracts. The margins will come back subsequently. Specialty and CDMO recovery is tilted towards second half of FY25. So the recovery will be later than expected. But yes, some commentary on new CEO is a little positive for the company.
Okay, now we know why the stock has been under a lot of pressure lately. It's been weak numbers for a while now, and that's something that's reflecting in the stock. But back to Mangalam, he's tracking Radico, Khaitan and Lemon Tree hotels. Well, this is a space that has been buzzing, booming rather. Have both companies done well this time?
Radico has done better than Lemon Tree. I mean, stiff drink out there for Radico Khaitan. 47% jump in the revenues. This is the revenue excise that I'm talking about. EBITDA jumped by a similar amount as well, led to the margins being stable at around that 12.3% mark. The net profit grew 23%, and that's because the companies, added a new plant to their overall balance sheet, and as a result of which depreciation element was higher. Internals were rather strong. Total volumes grew just 3.7%, but that was because of the, popular segment not doing too well. Prestige and above, the higher premium segment grew 20% in volumes, and their contribution to sales increased as well. Add to that, the balance sheet strengthened too. They cut their debt by about 102 crores quarter on quarter. Net debt now stands at 670 crores. For Lemon Tree, actually, the numbers weren't too bad if you look at it on a existing properties basis. But this time around, EBITDA and net profit were impacted by one, planned renovation expenses that the company had undertaken. And secondly, remember in October itself, the Aurika Mumbai property opened. So that aided their expenses, but did not add to their revenue as much. So 24% jump in revenue is what we saw. The EBITDA grew by just about 10% and the net profit declined by 10%. The average revenue per room increased by 10%, but occupancy decreased on a high base. Expect the stock to open in the red, but will soon recover, given the street will see, that going forward, Aurika Mumbai will aid to their revenue and average room rent as well.
All right, the hotels, right? I mean, stocks have done very, very well, and we'll have more on this as we go along. Navin Lignite, NLC India also reported numbers. Whether we'll have the management a little later with us, but let's get the numbers from Vivek first. Vivek, morning.
Well, good morning. As the earnings volatility continues in this particular space, so what's actually happened is that on a year-on-year basis, revenues have gone down 14%. This on back of the mixed fortunes that both of the segments are seeing. So while the mining revenues jumped up almost 45% on a year-on-year basis, the power segment this time around saw its revenues dip by almost 21%. Back of that, overall revenues down 14%. EBITDA, again on a year-on-year basis, down over 30%. Margins too, quite weak this time around, 28.6% versus 37%. So this will be something that we'll want to ask the management on. Along with that, this particular quarter, the company saw profitability of 250 crore. There was a loss last time around, but this was largely on the back of multiple one-off factors that the company experienced in the last quarter. Along with that, the company has managed to go ahead and exceed its target guidance as far as capex is concerned. So this particular year, the capex that the company has achieved is over 3,900 crore, 21% over what the company had earlier guided for.
All right, thanks a lot for that. We will in fact connect with the management of NLC India. This happens at 9:40 a.m. later today, so do stay tuned in for that. The other stock I'm watching this morning is Endurance Tech. I'm going with green over there because the numbers were really good. If you look at it, the operational performance has been improving. The company has told us that this is because of lower electricity and gas prices in Europe compared to what they saw last year. So that has aided their operational performance. The improving EBITDA is also because of higher volumes that they've seen across Europe. And remember, 40% of their business, almost 40% of their business comes from Bajaj Auto alone. That's their single largest client. And Bajaj Auto has seen a big improvement in earnings. Hence, that's reflected in Endurance Tech's numbers as well. Q3 numbers, revenue growth of 23%, EBITDA growth of 25%, EBITDA margin stable at 11.6%, and net profits have gone up 40.7%. So, pretty good numbers going with green over there. But let's hop across to Upasna. She's tracking EID Parry this morning. Upasna, over to you.
Well, good morning, Sonia. The company reported a weak Q3 number. On a consolidated basis, the profit was down nearly about 53% on a Y-on-Y basis, while the margins were also under pressure, down about 378 basis points, stood at around 5.4% versus 9.2% on a Y-on-Y basis. But the company says that the operating performance of sugar segment, which is the main segment of the company, is impacted by the reduction in the export volumes, which was mainly impacted due to restrictions imposed by the government. Secondly, the distillery segment, the profitability improved mainly due to the volume benefits that kept flowing from expansion and better realizations. While the company's nutraceutical division reported a loss on account of continuing certificate issues that were seen in Europe region. While going ahead, due to government restrictions on use of sugarcane juice syrup for ethanol, the company expects adverse impact on ESP targets and performance of the distilleries. So all in all, we are seeing a weak Q3 for EID Parry.
All right. Thanks a lot for that. Well, here's a quick recap of our top stocks with positive news flow. There's Britannia, Max Financial, Nykaa, Berger, Paints, Radico, Khaitan and Endurance Tech. While stocks with negative news flow, Navin Fluorine, Lemon Tree Hotels, NLC India and EID Parry. But let's also get a quick roundup of all the action from the commodities market. Manisha Gupta joins in to tell us what's been happening there overnight. Manisha, hi, morning.
Morning, Sonia. Thank you for that. Well, some stability and even some gains is what I'm seeing in commodity markets. That is because the run-up in US dollar has seen a pause. That has been supportive for many of these commodities. For the crude oil prices, there are various factors working. One, you have the inventories in US, which have seen a gain. So whether it's for gasoline, distillates or crude, all of those inventories have seen some surge coming in. There are also conversations about Gaza ceasefire, and that has taken some premium off the prices, is the reason you have the crude prices in check and trading below $80 a barrel. It's going to be about U.S. production, though, that can give support to prices. The markets do believe that the U.S. crude output, after hitting an all-time high of 13.3 million barrels per day in December, has declined to nearly 12.8 in the month of January. So that is what is leading to some premium here. The street also is looking at some jump come back in case of natural gas prices, because gas share in power generation is 42%. That is what is expected in 2024. And and the electricity consumption is expected to hit a record high, not just in US and in Europe as well. The support also is seen in gold, silver, copper, aluminum. These metals also have gained because of the decline in dollar. The street will now watch out for the U.S. Fed official statement. At least 7 to 8 U.S. Fed officials are slated to speak in the rest of this week, and the further direction would come in from that.
All right. Manisha, thanks very much for that. We'll take a quick commercial break here. We'll come back. We'll connect with Navin Choksi, Managing Director at DR Choksi FinServ, for some fundamental stock check. And of course, iron earnings as well as we go along. Stay with us.